Hi guys, Anthony here and welcome to another video. On Wednesday, the Chancellor announced his budget, which outlined how the government was going to spend money over the next year and also bring money in, as it spent a lot of money to support the economy during the pandemic. So in this video, I'm going to break down exactly what the Chancellor said and how that impacts your money. This was dubbed the Spend Now, Pay Later budget because the Chancellor has committed to supporting people and businesses through the pandemic, but then to pay for that, charged higher tax in the future. First of all, the Furlough Scheme has been extended. This has been extended right to the end of September, so that means individuals will be supported for 80% of their regular pay. The government will ask companies to help support them by paying 10% of people's wages in August and 20% of those people's wages in September. Also, the Chancellor announced support for the self-employed, meaning that the fourth grant is coming in, meaning that people who are self-employed can claim up to 80% of profits, up to a limit of 7,500. And also Grant 5 is coming in. And Grant 5 will be slightly different. If you've seen your turnover drop by 30% or more, you'll still be able to claim 80% of your profits up to a level of 7,500. However, if your turnover has dropped by 30% or less, you'll only be able to claim up to 30% of your trading profits, up to a maximum of £2,850. And that's great news because many people who have been impacted by the pandemic, who are out of work because they're furloughed or aren't getting as much income because they're self-employed, then they're getting supported by the government. And that's been extended right the way up to September. And hopefully by September, we'll all be pretty much out of this mess and hopefully can be returned back to normal. Next up, I'm going to talk about housing because the budget contained an awful lot of pieces of good news for people who want to get onto the housing ladder. As the Chancellor said, he wants to turn this country from generation rent to generation own. First up is the stamp duty holiday is due to be extended. However, the Chancellor has surprised us all by saying that it's actually going to be extended for 3 months. But that isn't it. When the stamp duty holiday comes to an end in June, it will actually drop from 500,000 that it is right now down to 250,000, and that will run right to the end of September. That just means that between June and September, you won't be charged stamp duty up to a property worth 250,000. That is half what it is right now, as it's currently 500,000, but it's double what it is normally, which is 125,000. So that will help a number of people get onto the housing ladder. Another great thing for first-time buyers to get onto the housing ladder is the 95% mortgage. Many first-time buyers struggle to save for a deposit, so the government is going to guarantee loans up to 95% of the value of a home, which is up to £600,000. These mortgages will be available from April, and we've seen a number of lenders offer these products. These include Lloyds, Barclays, Santander, and HSBC. So that's great news for first-time buyers who are struggling to save for their deposit. So that's how the government is spending money. And some of those were a few surprises, as I wasn't expecting the stamp duty holiday to be extended quite so much. And I wasn't expecting there to be such generous backing for first-time buyers. But overall, good news to support the economy and support individuals through the pandemic. So obviously the government's spending a lot of money, but how it gets money to spend all that money is through taxes. So unfortunately, there will be tax rises. As we know, the government has the biggest deficit since World War II, and somehow it needs to pay it off. So it needs to raise taxes so it has more money to pay off all that debt. Now, one area which the government is going to raise taxes is corporation tax. Now, corporation tax in the UK is currently at 19%, which is one of the lowest in OECD countries. And in my predictions, I actually thought that this was going to be raised to around about 23%. However, the Chancellor announced that he was going to raise corporation tax to 25% in 2 years' time. Therefore, he's allowing for the economy to recover, but then charging higher taxes once it does. However, another tax which the Chancellor announced was going to change was the income tax. However, good news, income tax isn't going to rise. And what sounds like good news is that the income tax bans are frozen. However, this actually isn't necessarily good news. What it means is as income tax bans freeze, that as income grows, you'll just be taxed more, as you could just move into a higher income tax band. And finally on the tax point, one subject which wasn't talked about was the capital gains tax rise. Now, I did mention in my prediction video that the capital gains tax could be impacted by this budget, and they could bring the capital gains tax in line with income tax. So this was expected to rise, but did it? No. Could it? Yes. Because on the 23rd of March, there is a day called Tax Day, where the government is going to announce its plans for tax over the next 10 years. And on that day, they could announce changes to the capital gains tax regime. And of course, I will be covering tax day for you, so that we all know how much we're going to get taxed in the future. And finally, there are a couple of things which the government threw into the budget that should hopefully help us all out. Firstly, one that I mentioned in the predictions video is that the contactless limit is going to increase from £45 up to £100. Now, technically that's in law right now, but banks and financial service providers need to do a bit of plumbing in the background to ensure that the whole system works properly. So you can expect the £100 limit to increase later on in the year. And finally, I mentioned that because of the UN Climate Change Conference at the end of the year in Glasgow, the government was going to announce some green initiatives. One thing that they did announce was a sale of green bonds to the public. These will be run through the National Savings and Insurance Company, a bit like premium bonds. At the moment, nothing has been released, but I'll keep you updated for exactly what they mean and how you can invest into these new green bonds. The government did announce a net zero innovation portfolio and a national infrastructure bank. This is the government's attempt to support the green economy and making the UK one of the leaders in the climate change industry. However, many green campaigners say the government just didn't do enough in this budget. So let's wait and see how this develops over time. So there you go, there's your roundup for the budget. Now there are a number of outstanding questions, particularly on the tax side. Capital gains tax, we don't know if it is going to be raised, so we'll find out later on in the month what has happened with that. However, what is good news is that there is more support for individuals and businesses to get through the pandemic. So hopefully when we can all go back to normal, we all have enough money to enjoy ourselves. And if you have enjoyed today's video, then please hit that like button. And if you want to see more videos from a finance professional talking about everything, personal finance, and investing, then hit that subscribe button. And I'll see you next time.